Let's bring in CNBC contributor, Big Technologies, Alex Kantrowitz. Alex, good to see you. I saw you here at the exchange yesterday off camera, but let's talk about Nvidia. It's weird. Nvidia sort of has to make the case at this point. It's been doing so well that it continues to do well and maybe can do even better. What have you found to be the most notable points out of GTC?
Well, first of all, it just highlights the expectations on this company. Only Nvidia could tell you that it's going to make $1 trillion on two products or thereabouts over the next 2 years, and people view that as a disappointment. But you have to think about the environment that we're operating in. We're in a world right now where the capex among big tech companies is expected to be about $700 billion this year, up from $400 billion or so last year. And so who knows where it will go in 2027. Maybe it'll be $1 trillion if it keeps up on this pace. So if you're looking at maybe $1.5–2 trillion are being spent over the next couple of years, for Nvidia to say we're going to walk away with $1 trillion, for people are starting to, they're expressing disappointment about that. But ultimately, I think the business is in really good shape. They are going to capture the lion's share of that capex. And as AI continues to accelerate, we were talking yesterday about all the different product uses that are available today that weren't available just a couple of months ago. I think Nvidia is going to be poised to capitalize there.
For a while, a few months ago, people were excited bidding up Nvidia stock because of how much folks were buying it. And people were excited about the hyperscalers, Google, Amazon, Microsoft, about how much the potential was for them to grow in AI, even though they were spending a lot. Now there seems to be some lukewarm sense on both. How do you balance the opportunity for the infrastructure makers like Nvidia, even though Nvidia is kind of like a singular name there, and the margins against what it means for these big companies that are spending all that money on the infrastructure?
Well, first of all, there was a frenzy in stock buying over the past couple of years where people just saw the growth that Nvidia was turning in and they wanted to be a part of it. So they ran to it. But right now, we do know that there's a lot of revenue forecasted for Nvidia, and it has sort of stagnated a little bit over, at least in 2026. So I think there is room to grow there. But as far as where the margins are going to be found, I would argue that even those who are deep within this, whether they're the chip makers, the application builders, the hyperscalers, they're not quite sure. And there is an argument to be made for every single one of these categories that they could be the one that capitalizes the most or they get nothing. Think about model building, for instance. If you're building something as powerful as maybe artificial general intelligence, that should be economically valuable. But if somebody else builds it, can you hoard it? Can you charge a premium over it, or does it commoditize? Same with chips. We're seeing this with the inference conversation around Nvidia right now. You would think that Nvidia, as AI gets adopted more, would be in the best position, and I think it probably is. But as we move from training to inference, it's going to have much more competition. So my perspective here is that it is dynamic, it's volatile, it's changing rapidly, and investors are just going to have to hold on to their seats for the time being as we see this shake out.
One of the areas we perhaps don't talk enough about is the software for data management that sits in between the infrastructure and the applications, thinking about also how all this data gets stored, the databases that make it suitable for AI, how you manage it, the data lakes, thinking about the likes of Snowflake, Datadog, et cetera. How do you think about their place in this ecosystem and maybe their valuations or the amount of conversation there is about them relative to the rest?
Well, I think they're going to be very important. And it goes to this broader conversation around, will software be worth something or will it be worthless as AI takes off? Well, even if you go into an era where you're doing much of your computing within the chatbot, you're still going to need good data to be able to work off of. It's not like all of that's just going to be stored in the memory of ChatGPT, no matter how good it gets. So I think these middle layer companies do play a very important role, and they're not going to be replaced anytime soon. So even though we might see some hysteria like, oh, AI can build an app, which it can, and it's impressive, I think it's very important for investors to sort of separate that functionality out from the core infrastructure that a company like a Snowflake or a Datadog is providing.